Please remember, I am not a financial advisor. Time has no divisions to mark its passage. There is never a thunderstorm or blare of trumpets to announce the beginning of a new month or year. Even when a new century begins, it's only we mortals who ring bells and fire off pistols. Thomas Mann.
You can't be a crypto hub if you can't get a bank account. So what we have delivered there is a serious agenda on putting in place a core framework on cryptocurrency licensing so that there is a regulation, there is a market level of regulation. I have to say to you that I was surprised that so many people wanted to have regulation, because once you invite Canberra into your house, we will never leave, and you may regret that. But we have nonetheless recommended what I think is a very targeted set of regulation. I'm not saying that a crypto market license would have the exact same obligations as a market license that would apply to the Australian Securities Exchange. I'm not saying that a custody or depository regime for digital assets would be the same as would apply to JP Morgan or State Street, which are managing custody services for managed funds or super. I'm not saying that a DAO would be the same as a PTY Ltd company or no liability mining company. What I'm saying is that we need to have new regulation established in the corporations law, enforced by ASIC, to protect consumers, to drive investment onshore. Because if we do these things, we can be a crypto hub. We can be a leading digital asset jurisdiction ahead of or on par with Singapore, the UK, and the US.
Australia has announced that they will lean in on regulations for crypto assets. Australia is going to write regulations custom tailored to crypto assets, and it's interesting he mentions that they are trying to be a crypto hub on par with Singapore, the UK, and the United States. Does he know something that we don't?
Now, it is true that cryptocurrency is about much more than just drug dealing. It is about the technology and the utility of that technology, and the utility of that technology to the economy that has attracted my interest. Blockchain and cryptography have the ability to sweep away layers and layers of intermediation and deadweight cost. Many people look at this issue through the prism of their personal investments. Is my Bitcoin going up or down? Is my Ethereum going up or down? But that is a fundamental mistake, because that is a failure to grasp the nettle that the technology underpinning it is sound. The technology underpinning it can increase choice in the market, can cut prices for consumers. We need to have more competition. We don't want to have our economy run by a bunch of oligopolies. And the same should be said for the payment system.
Andrew Bragg, the Australian politician, is telling you that the economy isn't going to be run by the few banks, and there is a plan for crypto because there is utility behind the tech. We're in XRP because we believe in utility as well.
There are three major planks of the recommendations. One is to put in place a core framework, which is licensing of markets, licensing of custody, and putting in place a corporate reform agenda around a decentralised autonomous organisation, which is a whole new form of corporate structure in Australia. We've also recommended that there should be tax reform. The capital gains tax settings are not fit for purpose when it comes to dealing with digital assets, and so we've recommended that there should be effectively a tax cut there for people engaging in this sector. And we also tried to address the very distressing topic of debanking. One particular person who came before our inquiry had been debanked 90 times. And the reality is that in many cases, the major financial institutions have acted like a cartel. They have sought to ensure that fat margins on things like remittances and international cash transfers, we're protected. People have been debanked and businesses have been debanked for very soft reasons. Now, I'm a liberal, and I'm not here to say that Bank A must bank business B. I'm very conscious that these arguments can come back to you. I don't want to see banks be forced to compulsorily finance a coal mine. I don't want to see banks be forced to bank a customer that they don't want. But we can't have a situation where banks are routinely debanking their competition, which is stymieing innovation and undermining choice and competition. We cannot have that. And that's why the recommendations we've put forward are a liberal solution designed to stop this sort of debanking, which is not what AUSTRAC is calling for. And after all,
he's saying all the right things, especially bringing down capital gains taxes.
In terms of the things that we're looking at, it's the things we've already talked about to some extent. It's the emergence of a new variant that could lead to significant economic. If there were to be a variant, for example, that were quite resistant to vaccines, it could have another significant effect on the economy. We don't see that. We don't have any basis for thinking that the new variant that we have is that one, but it's certainly one we're looking at. I would say, cyber risk, the risk of a successful cyber attack is, for me, always the most, one that we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet. So I could go on with a list of horribles, but I think that's a decent picture of where I would start.
The central banks and governments have blown the largest bubble in history. There is over $29 trillion in debt, and the inflation numbers are the highest in 40 years. When inflation was this high, Paul Volcker raised interest rates to 20% in order to save the dollar, and by raising interest rates caused a recession. He did the unpopular thing that was needed, and his actions had political backlash. Compare Volcker's actions with today's FOMC. They are cutting back in bond purchases but keeping interest rates unchanged. Their solution isn't to stop inflating, it's to inflate a little bit less. Now, we've heard the central bankers foreshadow a cyber attack over and over. When this bubble finally pops, a hacker would be the easiest scapegoat. If a cyber attack were to take down a major financial institution, 80% of Americans were against the bailouts in 2008. If the banks fail again, what would the people do? If the banks failed because of a cyber attack, would the masses accept it?
How about the cryptocurrency issues? Anything that worries you there that's going on in there in terms of, it's obviously a lot's happening in that sector. Is that concern you at all?
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated, and right now they aren't, and they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, and you could have a payment network that was immediately systemically important, close to immediately systemically important, that didn't have appropriate regulation and protections. The public relies on the government and the Fed in particular to make sure that the payment system is safe and reliable, as well as the dollar, and to provide a safe and reliable, trusted currency.
The XRP ledger is designed to issue stable coins and other assets. If I am Bank A and you're Bank B, I can issue an IOU that I am backing and send you the IOU in real time for practically nothing. There are 500 plus banks and financial institutions on RippleNet. The network with software that can utilize the XRP ledger. We are seeing in Australia the regulations are being ironed out, and there will be a day where the banks and financial institutions can take advantage of cheap instant settlement. all following the appropriate laws?
So firstly, just quickly on the latter part, right? So MoneyGram and Western Union accept money directly from their licensed institutions. They accept money directly from individuals, right? We don't. So we are behind the banks. We are a B2B company. We have no front-facing retail presence in which we either take money or remittance from individuals, right? So we only work with regulated financial institutions. So, for example, MoneyGram is our customer, and so are a number of banks here in Saudi, right? So that's one.
Every bank on RippleNet is following all of the appropriate laws, and it's B2B or bank to bank. Powell said that you can see a payments network pop up overnight that could be systemically important. When Facebook announced Libra or Diem, there were congressional hearings and the regulators went after Facebook. RippleNet is 500 plus banks with some of the largest institutions. What's the difference? RippleNet is set up using XRP when the laws are in place. Facebook jumped the gun. But still, we haven't heard much from Congress or the Senate. We have heard from the SEC, but even in other jurisdictions, we rarely hear about a congressional hearing based on RippleNet.
It will cause future growth to be below potential, yes. When you have an interventionist Fed managing the economy, supporting the economy, as that's a euphemism they use, but that's attempting to direct capital. That's attempting to distort and manipulate the interest rate to socially engineer, to affect people's decisions. I much prefer to trust the private sector to make good decisions about the future and about where to invest. And what they really need are clear monetary signals. So the less intervention from the Fed, the smaller the Fed's footprint, the better for free markets to function and to result in those optimum outcomes that bring prosperity to the entire economy. I'm thinking that to the extent that we've been living in accordance with modern monetary theory, if you live by MMT, you're going to die by MMT. If you think deficits don't matter, and you think that the Fed can create all the money it wants with a keystroke, then if you go to the MMT for what do you do if you get inflation, the recipe is you tax. You pull the money out of the real economy by taxing people. And not just the ones that Elizabeth Warren is after, not the rich people, but the middle class, the ones who go to Walmart and Target, the ones who are driving up those consumer prices that lift the CPI to alarming rates. So that's what I'm concerned. We've gone too long not living by the rule of sound finances and sound money.
I think the monetary system is going to crash and we will be reborn to a digital currency standard where the transactions will be traced and tracked and taxed in real time. Order and simplification are the first steps towards the mastery of a subject. Thomas Mann. Thanks everyone, I hope you enjoyed the show. Please take a moment to subscribe and like. If you enjoy my content and wish to support my channel, please consider joining my Patreon.